Running payroll and reconciling payroll are two different jobs. Gusto may calculate and process payroll correctly, but incorrect account mappings, duplicated bank feed entries, or unresolved payroll liabilities can still make your QuickBooks reports wrong. In this tutorial, you'll learn how to reconcile Gusto payroll in QuickBooks Online using a practical, step-by-step accuracy check. This OBG outsourcing tutorial covers account mapping, journal entry review, bank matching, payroll liabilities, and the most common causes of payroll mismatches. Educational information only. Account treatment depends on the business and its payroll arrangements. Before reconciling anything, understand how the information moves. When Gusto is connected to QuickBooks Online, Gusto creates and synchronizes a detailed journal entry when payroll is run. The journal entry uses the accounts selected in the Gusto integration settings. Depending on the configuration, it may include gross wages, employer payroll taxes, benefit expenses, reimbursement expenses, benefit liabilities, and credits representing payroll-related withdrawals. The bank feed confers the cash that actually left the account. A correct reconciliation connects those two sides without recording the expense twice. Step 1. Gather the documents for one payroll period. Start with a single payroll check date. Do not try to troubleshoot several months at once. From Gusto, obtain the payroll summary and the related accounting or journal information. From QuickBooks Online, locate the synchronized journal entry and the related bank transactions. Also, identify any separate payments to benefit providers, retirement plans, or other third parties. One payroll period, one check date, one complete reconciliation. Step 2. Review the Gusto connection and synchronization status. In Gusto, open the app directory, go to Connected Apps, and select QuickBooks Online. Confirm if the correct QuickBooks company is connected. Both platforms generally require appropriate administrative permissions when setting up or reconnecting the integration. If a payroll did not synchronize, open the applicable payroll under Pay History and review its status. A failed entry may require corrected mappings, restored accounts, updated permissions, or reconnection. Do not manually create a replacement journal entry until you confirm whether Gusto already synchronized the original entry. Otherwise, you could create a duplicate. Step 3. Review the account mappings. Gusto pulls the chart of accounts from QuickBooks Online and uses those accounts to build the payroll journal entry. Default mappings can automatically assign newly created payroll categories to selected QuickBooks accounts. Detailed mappings control where specific payroll categories are posted. Every active payroll category should point to the correct account. These are examples, not universal rules. The appropriate account structure depends on the company's accounting policy. Review mappings whenever you add a new earning type, deduction, benefit, time off policy, payroll adjustment, or a new state. A new payroll category can create an unmapped item or flow into an unsuitable default account. Remember, changing a mapping generally affects future entries. Previous entries remain unchanged unless they are properly resynchronized. Step 4. Open the synchronized journal entry in QuickBooks and review every line. In this fictional payroll, gross wages are $12,000. Employee payroll taxes withheld are $2,050. Employer payroll taxes are $918. Employee benefit deductions are $900, while the employer contributes another $600. Employees also receive $150 in reimbursements. Net pay works out to $9,200. The first check is simple. Total debits must equal total credits. Both sides equal $13,668. A balanced journal entry is necessary, but balance alone does not prove that the accounts or amounts are correct. Step 5 is the simple accuracy check. Compare these amounts between the Gusto payroll report and the QuickBooks journal entry. Gross wages, employer payroll taxes, employer benefit expense, employee benefit deductions, reimbursements, net pay, and total payroll-related cash withdrawals. Each Gusto total should have a logical home in QuickBooks. Gross wages in Gusto equal $12,000, and QuickBooks shows a $12,000 wage debit. Employer payroll taxes equal $918 in both. The benefit liability equals employee deductions of $900, plus the employer contribution of $600, a total of $1,500. Employer payroll cost equals gross wages, plus employer taxes, plus employer benefits, plus reimbursements. $12,000 plus $918 plus $600 plus $150 equals $13,668. Step 6. Review the bank feed withdrawals. Gusto-related cash may appear as one withdrawal or several, depending on timing and configuration. Match the net pay withdrawal and the payroll tax withdrawal to the cash or clearing account credits already included in the journal entry. If the journal entry already recorded the expense, adding the bank transaction as a new payroll expense will double the cost on the profit and loss statement. Use the bank feed match function instead of adding a second expense. Confirm the amount, date, and account before accepting a suggested match. If a withdrawal does not match, investigate whether it includes an adjustment, off-cycle payroll, contractor payment, return payment, or fee. Step 7. Review payroll-related liability accounts. Employee benefit deductions and employer contributions may be credited to a benefit liability account because those amounts remain payable to the provider. When the business pays the provider, the payment should reduce the liability, not create the benefit expense again. If a liability should have been paid but still shows an old balance, something may be missing or misclassified. And remember, employee deductions are already included within gross wages. They are not an additional employer wage expense. Step 8. Perform a reasonableness review using the profit and loss statement. Run the report for the payroll month and compare payroll expenses with the Gusto totals. In our opening example, QuickBooks showed $27,336 of payroll expense, exactly twice the correct amount. The synchronized journal entry recorded the payroll cost correctly, but the bank withdrawals were added again as expenses. After matching the withdrawals to the journal entry, instead of creating new expenses, payroll cost returns to $13,668. If payroll expense appears unusually high or low, compare it with the previous pay period and investigate the difference. Here are 7 common Gusto and QuickBooks payroll mismatches. 1. A bank withdrawal added as a new expense, which duplicates an expense already recorded through the journal entry. 2. Gross wages mapped to the wrong account, which distorts payroll reporting. 3. A new benefit or deduction not mapped, which can cause synchronization errors. 4. Payroll posted to the wrong date. Check whether the integration uses the exact date, the debit date, or the end of the pay period. 5. Benefits paid to expense instead of liability, which can duplicate the employer benefit costs. 6. A manual journal entry plus the synchronized entry. Never create a manual replacement without first confirming the synchronization status. And 7. Old payroll liabilities left on the balance sheet. When you find a mismatch, do not immediately delete or overwrite entries. First, identify the source. Was the problem created in Gusto, in the account mapping during synchronization, in the QuickBooks bank feed, or through a separate manual entry? Then work through it in order. Save the Gusto payroll report. Save the QuickBooks journal entry details. Identify the source. Correct the mapping if necessary. Unmatch bank transactions before resynchronizing, when required. Resynchronize only after reviewing the impact. Confirm that no duplicate remains and repeat the accuracy check. Preserve an audit trail. Do not force a plug entry, merely to make the accounts agree. Before marking payroll reconciled, confirm all 8 points. Gusto payroll was successfully synchronized. Every active category is mapped correctly. Gross wages agree. Employer taxes agree. Benefits and deductions agree. Journal debits equal journal credits. Bank withdrawals are matched without duplicate expenses, and payroll liabilities are reasonable and supported. When all 8 pass, your payroll is not only processed, it is correctly recorded. Payroll reconciliation can become more complicated when a business has multiple departments, benefits, deductions, reimbursements, contractors, state taxes, or off-cycle payrolls. OBG outsourcing helps small businesses review payroll account mappings, reconcile Gusto payroll with QuickBooks Online, investigate mismatches, and maintain accurate, tax-ready financial records. Support can include monthly bookkeeping, payroll reconciliation, account cleanup, balance sheet review, and financial reporting. Accurate payroll, reconciled books, better decisions. If your Gusto payroll does not match QuickBooks, or payroll expense appears too high, too low, or duplicated, contact OBG Outsourcing for a payroll reconciliation review. Subscribe for more practical bookkeeping and accounting tutorials. Like this video, share it with another business owner, and comment below with the payroll mismatch you want us to explain next. This tutorial provides general educational information. The correct account mapping and accounting treatment depend on the company's facts, payroll arrangements, and accounting policies. Software interfaces and features may change.